Your renewal letter will arrive looking like a favor. It isn't. Here's exactly what to do instead, and how much it's worth to you personally. The simple version, the mortgage stress test makes lenders confirm you could afford payments at the higher of 5.25% or your contract rate plus 2%, according to OSFI, Canada's banking regulator. Think of it like a driving test you only have to retake if you upgrade to a bigger, faster car, said an awarder. Not if you keep driving the same one. I read the fine print so you don't have to. And here the fine print is everything. Part 1. Renewing with your current bank while keeping the same balance and amortization has never triggered the stress test, according to OSFI. Think of it like renewing at the same gym. They wave you straight through, but they aren't fighting to win you back with a better price. That easy renewal letter is convenient precisely because it's rarely their best offer. Part 2. The old trap. Before November 2024, uninsured borrowers who wanted to switch lenders at renewal had to repass the stress test, even though staying put did not per industry sources. Think of it like a phone plan that's simple to renew but demands a whole new credit check the moment you try to take your number to a competitor. That imbalance kept people stuck, even after never missing a single payment. Part 3. The fix most people missed. As of November 21st, 2024, OSFI no longer prescribes the qualifying rate for uninsured borrowers doing a straight switch at renewal. Same balance, same amortization, no new money. Insured borrowers already had a similar exemption when nothing about the loan increased. Think of it like finally being allowed to move to a cheaper provider without a new credit check, provided you carry over the identical plan. Part 4. What this is actually worth. On a $600,000 mortgage, staying at a 5.25% posted rate instead of switching to 4.60% costs about $3,900 a year, or $1,950 over 5 years according to renewal rate comparisons. The switching costs of roughly $700 to $800 are often covered by the new lender. Think of it like auto-renewing at full price for something on sale everywhere else. The loyalty runs one direction only. Part 5. Meet Sarah. She's 38, earns $95,000, and has a $600,000 uninsured mortgage at 5.25% ending soon, with rate figures drawn from the research example. She assumed she'd have to pass the stress test to switch banks, so she nearly signed the first renewal letter. Think of it like ignoring a coupon because you were sure checkout would reject it, when it would have saved her nearly $20,000. For you, confirm your renewal is a genuine straight switch. Log into your lender's portal, note your exact balance and remaining amortization, and plan to keep both identical with no new money added. Then confirm both lenders are federally regulated and your mortgage is prime. If this is useful, subscribe. The next breakdown is already coming. Before I get to the last part, which is the most counterintuitive piece of all, here's the catch nobody advertises. The moment you add to your balance or extend your amortization, OSFI treats it as a refinance, and the stress test at 5.25% or contract rate plus 2% snaps right back. Think of it like a duty-free allowance, the swap for the identical item and you sail through but add one extra thing and the whole bag gets inspected. The second catch is the price of failing that test. If Sarah tops up $40,000 and extends her amortization, it becomes a refinance. And failing could push her from a prime 4.60% to a subprime 6.60% per the research example. On a balance around $640,000, that 2-point gap is roughly $12,800 a year in extra interest, and across terms could exceed $50,000. Think of it like a small upgrade that voids the entire warranty. For you, practically, don't sign the first letter. Pull your renewal offer, then compare it against the best discounted rates for your mortgage size and term. If your offer is 0.50 to 0.6 points higher, you're likely leaving thousands a year on the table based on the $3,900 per year example. Think of it like comparing insurance before you renew in 5 minutes to save a 5-figure sum. The takeaway for you: if you don't genuinely need extra borrowing, keep your renewal a clean straight switch to a lower prime rate and finance renovations another way. That keeps the stress test off entirely and can save 5 figures over a term on a $600,000 plus mortgage. Think of it like keeping 2 errands separate so the easy one never gets tangled in the hard one. So before you sign any renewal letter, know exactly whether you're a straight switch or a refinance, because that single distinction can be worth tens of thousands. Next, I'm breaking down how mortgage penalties are actually calculated when you break a term early, the number that shocks people most. Subscribe so you don't miss it.